Hello, I'm Jacquette Timmons, contributing blogger for Yodlee's Mind on Your Money. I'm also a financial coach, trainer, and the author of Financial Intimacy. It's just a week before we have to file our tax deadlines, and so I am here with Richard Levy-Chin, CPA and managing partner of KBL, to share with you some last-minute tips on how you can prepare for the tax season. So Richard, thank you so much for being with us today.
It's a pleasure to be here today, Jacquette.
Awesome. Can you share with us some last-minute tips that people need to bear in mind in the last couple of days before we have to file our taxes?
Got to get those receipts together. Whatever receipts that may be business related or related to your job, get the shopping bag out and just start throwing them in the shopping bag. Also, make sure you get together your W-2 statements, your interest income, dividend income, any kind of stock transactions you may have had. Also, you need to get together any kind of statements relative to mortgage interest on your home, or real estate taxes on your home, and also get a copy of last year's tax return. At the end of the day, if it's a challenge for you to do your own tax return, tax professionals like myself are always available.
Right.
The other thing also you need to keep in mind for those that qualify, April 18th is the deadline this year.
That's right, because there's a weird holiday on the 15th,
yes,
right?
Yes, there is. But also April 18th is the deadline for putting in your IRA contribution, assuming that you qualify.
Okay, great. And is there a dollar amount that people should be keeping in mind for that contribution? Is it $5,000, $2,500?
It's $5,000. It's also based
$5,000.
upon how much revenue you have. Most people really don't qualify. High-end people tend to not to qualify for the IRA deduction, particularly if people that are subject to pension plans. They also don't qualify for the IRA deduction.
Okay, great. So that's what we could do for this year.
Sure.
Are there any things that we need to be thinking about as we prepare for next year's taxes right now?
As you look towards next year's taxes, one of the ways you can reduce your taxes is to contribute as much as you can to your 401k plan. For those taxpayers that also are business owners, they may want to look to set up high-end pension plans. However, if you're going to take a pension deduction on your company return, let's say December 2011, it has to be set up before December 31st, 2011. However, on your business return, you have until September of 2012 to make that contribution. So that's a great way of kind of keeping the company's tax spike down, and if you're an S corporation, that'll flow through to you also and keep your tax spike down.
Okay.
But the pension area is one area. The pension, Roth IRA, IRA, so those are the areas to kind of keep your numbers down. Another way to keep your tax numbers down is also increasing up to the max as it relates to the 401k contributions.
Okay, so the max, and not just in terms of what your company would match, but what you can actually
put in, but also at the same time, it also is based upon your own cash flow. If you can't afford the max, you don't put the max.
Right. That makes a lot of sense.
Last thing you may also want to do is to prepay put as much money in towards your state taxes, because the taxes that you pay in 2011 are deductible in 2011. So assume that you don't have any issues with alternative minimum tax.
Right.
So you may want to prepay as much of your state taxes as possible.
All right.
And if you're one of those people that qualify for estimated taxes, you want to make sure you make your estimated tax payments on time to reduce the possibility of any kind of penalties or interest for underpayment of estimated taxes. And also it helps you even out your cash flow. You don't want to have a big bite on April 15th.
Right, definitely. All right, well, you've got a lot to work with in terms of last-minute tax preparation tips, and we'll look forward to talking with you soon. Make sure to check out Yodlee's blog, Mind on Your Money. Thank you.